Oh man, that was cool. Look at us. We're on StreamYard. I don't know what it is, but I already like it better than GoToWebinar. We're using cameras. There's a countdown. I feel like I've leveled up. What's up, Tom?
You're big time now, out of mesh. You're big time.
Yeah, I feel it. I feel next level. So live here with you, Tom Sosnoff, my favorite options trader of all time. This is our first time we're looking at each other. I'm sorry I'm not better looking, everyone, but that's the Adam Sandler from 50 First Dates, where she's like, who's this? He's like, that's your boyfriend, honey. And she's like, really? And he's like, sorry, I'm not better looking. I love that line. All right, so welcome back from your trip. I want to talk about that. Welcome to everyone else. By the way, everyone chat in and say hello. I like to see the comments. I'll get used to it now because that's the one feature I haven't seen on this yet. All right, I guess Mike will let him come in. We'll see what happens. We'll see it. Wait for everyone to say hello. There we go. Okay, they're starting to come in. I just like to see it. Guys, everyone wake up. I like to see a lot of, yeah, there we go. I like to have everyone engaged at the beginning. It makes me feel, thank you. All right. Okay. So, hello, Wendy from Maples. Okay. Tom, so you just got back from a trip?
I did.
Croatia. Now, I'm curious, that's a different time zone for sure, right?
7 hours.
North Carolina, Cali on the call. There you go. A little slow to come in. 7 hours time difference. So number one, do you trade at all while you're on a vacation like that? Does your wife have a say in that?
We've been married a long time. She gave up on me, like a long time ago, trading wise. It's kind of an unspoken in our household. It's kind of unspoken. Tom just does his own thing, and she does her own thing, and we somehow survive. We don't have any. We're very independent, the two of us. Let's put it that way. We may or may not end up at the same hotel. So that's the way we look at our lives.
I need to get to that level. Like I had everything planned out today. I knew I wanted to trade the market close from 3:30 to 4. I knew we had the call. I was going to come on at 4:15, 4:30 call. And I had a nice little window from 3 to 3:30 where I wanted to go in my backyard and just chip some golf balls and relax. And I asked my wife beforehand, I said, and I have to talk low because I'm in my house. And I said, do you need me for anything? And she said, no. And so at like 3:22, I'm out there. I'm about to go in. And she's like, oh, can you drive one of the kids? And can you go make this call? I'm like, no. And she's like, why are you getting so annoyed? I'm like, because I had everything scheduled and now you're asking me to change it. Whatever. But like, yeah, I wish I was just understood that I'm a trader. I'm weird. I'm going to go do things on my own time.
Don't confuse this with an understanding. Understand that this is at this point, this is a contractual obligation. It's cheaper for us to keep each other.
So do you watch the markets when you're in Croatia?
Yeah, I do. I mean, I'm a junkie. So, I don't sit on my laptop the whole time, but I have my phone on, pretty much the whole time, but I'm sly. I'm pretty sly about it. Like I'm able to pull it off, I'm
like at 10 o'clock at night there. What time is it here?
3 cents. So it's 6 hours difference from your time. So
you could trade the close. Yeah.
You could trade the close. It's not that bad. Basically, the markets for me was 3 to 10.
So when you get home, there's no adjustment to like getting like what you missed or anything. You're still in.
Oh no. I actually didn't miss anything because my positions were so bad. It didn't. It was painful, but I didn't miss anything. Like it would have cost me more money. I've had a couple of short positions on in the last week in kind of NASDAQ, and it hasn't worked out that well. So I haven't. So I didn't miss anything. Like I missed getting shorter. Let's put it that way.
So that's a good thing. Yeah, that saved you money.
Yeah.
Let's bring up the tradie screen. Let's bring up the tasty screen.
Yeah.
And I actually had a good friend who just he opened a Tasty account the other day, and because he said, "Where should I trade options?" And I was like, "Tasty Trade, it's the best." And that's literally the conversation. And I was like, "But when you do, let's do a Zoom. I want to walk you through how to use it." And what I love was it was like teaching someone how to use an iPhone. It was so seamless, like going through setting up the bars at the top for like what I want to look at. Now, like for when you go into your trade screen, I have let me just bring up something that has options. So for my position screen, I don't want you to have to bring up your position screen now. We'll do trade screen. I have volume delta bid ask. Is that what you use? Yeah. Okay.
Yeah, I use bid ask is static, and these columns are configurable. I use delta and volume. I think, when I'm trading, it's all about like the speed of decision making, and the volumes there. Just this column I use volume, which these are all your choices, but I've checked off volume, and the reason I use volume is just to make sure what I'm looking at is liquid, which in most cases I only trade liquid underlyings, and then obviously delta just to make sure, because delta is also I'm sorry, I moved that. Delta is just another word for the probability of getting to that level. So I always use delta and volume.
Do me a favor though, click on delta because I want people to see. Now we don't need these other things, but if you just click on delta with the left click, you'll see. You should see.
What do you want to say?
No, when I do it, you see all the other ones come up. I don't know if it will show on the screen.
Yeah, there. Does that show? No,
it doesn't show. Okay.
Oh, okay. That's only because the way this software is, the way the video software that you're using doesn't show a pop up in front of the platform.
So what you guys are missing is when you click on delta, there's all these other things you could add should you want them. Obviously, me and Tom don't use them, so we're not saying you need them, but they have theta, gamma, vega, open interest.
There's about 20 choices, Adam. And if you have a bigger screen, like if you're on a big monitor, you can, and use a smaller font, you can have up to 6 different. You can lay out I only default to 4, but you can have 8 total, 6 plus bid ask.
And so as I was going through the tutorial, like he understood what calls were, he understood what puts were. The next thing I got into was implied volatility. And it's funny, I was trying to explain it. I haven't explained implied volatility in a while. I know to the right, it shows us what the expected move is, but implied volatility, is that defined as the rate of change?
Implied volatility is expected move. So okay. The simplest way to define implied volatility is just to say that implied volatility equals expected move. So what implied volatility is, it's an input into the Black-Scholes model, which is just a measure of how much the marketplace thinks that the underlying is going to move by whatever the specific time frame is. So that's why you'll see here, I just pulled up AMD because it's a liquid underlying, traded 50 million shares today. And when you have a stock that's very liquid.
Oh wait, we're not seeing AMD right now.
You're not seeing AMD on the screen?
Oh, now we are. We're good.
Okay. So when you type in any underlying, in the case of AMD, the volume is 51 million shares today. When you do this, you know there's plenty of liquidity in there. And what Tasty does is, so we write all our own models. It's very different than like a traditional, the legacy trading platform. And all our models stream in real time. So what we do is we use something called IVX, which is an implied at the money volatility. Now, all this is not that important to know, but I guess the reason each volatility lines up with whatever the expiration is. So if it's August, September, if it's July or June, and then to the right-hand side of that is the expected move. So like in June, there's 2 days left to expiration, 2 trading days left. There's only Thursday and Friday, and the expected move in AMD for Thursday and Friday is 351. But if you go out to July, the expected move is $12.50. If you go to August, it's $20. And that number is the mathematical equivalent of whatever this implied volatility is. It's just broken down from, it's a variable taken out of Black-Scholes, and that's all it is. And that number is a plus or minus. So it's like, for example, in August, AMD is going to, the 70% of the time it'll be within a $20 higher to $20 lower range that it is right now. So it's 154. So 175 to 135, 70% of the time. That's all that means.
Now, the higher the implied volatility, the more volatile the stock. So if you had something that's 5%, it's not really going to move that much. If you have something that's 40%, that's going to be a pretty good move. Now,
Yeah.
when we look at GameStop,
Let's type in GameStop.
that actually came down a lot. It was actually at 240% yesterday when I was doing the demo for this week, and now it's at 160, which makes sense because there's tomorrow that the market's not open, and then there's just 2 more days.
Yeah, I mean the meme stock game in GameStop is essentially over for June, because you can see here the expected move between today's close and Friday, which is crazy low, is only $1.80. And so, that's kind of the bloom is off the rose there. If you go out to July, it's a lot more, but it's way down. Like you said, it was 240 the other day. It's down to, 140. They've lost 100 vol points in GameStop. It's been the best short premium play, on the street for the last couple of days.
So one of the things that I like in that situation, and what I ended up doing, and I don't usually trade GameStop, but it's actually cheap enough, and I think, efficient enough that what I just did was I just bought the stock and started selling calls against it, because because I was like, if the premium stays like this for a little bit, I'll be able to just pay for it in a month. And I already collected like $8 in premium, and it's gone down $3.50, but it's been a great covered call kind of trade right there.
Well, yeah, I mean, you have 250% volatility. It was an unbelievable covered call trade. Nice trade.
Thank you. I guess the other trade I'd be looking at would be to maybe sell one of the more forward months and then go down to like, I don't know, January 2025, right? Like you could buy it, and then if you could just sell calls each week, you just need it to stay in the spotlight a little bit. But I guess eventually it's just going to die, and people are going to get sick of it.
Yeah, I mean, you're asking a lot out of one crappy company,
Yeah,
to say
too much to do that.
Yeah, I would not. I mean, personally, you do whatever you want. Personally, I would not go out to Jan of 25. I mean, I would be in the 24, somewhere in the 24s. I wouldn't probably go out more than 120 days. But whatever the case is, yeah, I mean, you're just betting that GameStop stays in play long enough to collect enough premium to take away all your risk.
Yeah. I do like the unusual option. I think GameStop, you would have to go out too far. If I could have done that less, like if the drop off was sooner, this could have been a good trade, right? Like if you could have bought the August for IV of 100% or less, and then sold the July that was trading at 180%. Like when you get that 80% difference in IV over a short period, that's pretty good, right? If you could get that.
It's great, but it's really weird. And I mean, it doesn't happen very often. It would be incredibly strange, only a situation like GameStop. And also you have to remember, there's no mispricing in the market. So if there's an 80 point vol difference between the front month and the back month, it's because there should be an 80 point vol difference. Like you don't have an 80 point vol difference because some market making firm made a mistake. You have an 80 point vol difference because that's exactly what it should be.
Right. The market is always as it should be. It's always efficient.
Exactly. There's literally never, nothing is ever mispriced.
Well, Berkshire Hathaway was last week.
Well, that was more of
all those trades got broken, right?
Yeah, that was more of an error. That wasn't, that was a mechanic.
I know. I'm just kidding. I had a trade broken one time. I bought and sold Emulex. Do you remember Emulex?
I do not.
It was like someone figured out how to create like a false report or something. It was up like 60 points. I had bought it, sold it, and they came out and they said that I had bought it like 10 seconds or 5 seconds after the official halt time, so that I didn't buy it. So I was shorted. And then when it got unhalted, it ended up coming down and it worked out, but it was scary. That was the only time I ever had a trade broken on me.
Yeah, they rarely break stock trades. In the old days, they used to break futures trades a lot, because when there was when there was pits, they would trade the orders in the pit would get traded through, and they would break your futures trades. but that doesn't happen anymore. With the electronic markets, it doesn't happen really at all in the future side.
I gotta say, you look very refreshed. I think the vacation did you well. You're like tan and stuff. I like it. Before I get in, I want to keep going down the progression, but I always like usually bring a whole team with you on here. And if people have questions for the Tasty team, you have your team here and they can ask anything, right?
Absolutely, 100%. So we have Nick from our trade desk. He's on, and he's answering questions. And you can ask anything in the chat. Nothing's off limits. And I think Britt's on, and she'll answer anything about Tasty. And you can always email me afterwards. I mean, I'm not going to look at the chat right now, but if you want to email me tonight, I'm just Tom at Tasty Live. Adam, I'm an email junkie, so feel free to email me.
We got Canada, Minneapolis, California, North Carolina, Maples. Okay. So now going down the progression, the next thing I told my friend as I was taking him through the platform was that ideally in any kind of trade, you want to be a collector of premium. That's where the math starts to work better. And you want to sell at the 30 delta going out around 40 days. Is that all right?
I mean, in an optimal world, the answer is yes.
Okay. Now, we're in a market right now. And so let's just discuss this market. Market's at all-time highs.
Yep.
But there could be a lot of stocks that if you own them that are nowhere near their all-time highs. Penn Gaming, Dropbox, SoFi. There's so many beaten up stocks I don't know what to do with. So it's really a have and have not game where NVIDIA, Amazon, Apple.
Now, this has been a one-trick pony market, and it's been concentrated to a handful of stocks at the top of the pyramid in the NASDAQ. And I mean, you've got a couple of trillion-dollar stocks that multi-trillion-dollar stocks that have been, I made the argument today that, I think NVIDIA is a meme stock. I don't think GameStop's a meme stock anymore. I don't even care about GameStop. I think NVIDIA is a meme stock. And, it's a $3.4 trillion company right now or something close to that. And I think that we've gotten to the point where, we're stocks like NVIDIA or something like 4 or 5 standard deviations above their projected move from the beginning of the year. I mean, we're a little bit of crazy time. We'll see. We're frothy. Let's put it that way.
So with that said, the premium on options is still trading as though everything's at an all-time high. Like there's not a lot of, they're not rewarding you for being willing to own stock or putting on a bear call spread or anything. They're not paying you a lot at all.
No, the marketplace adjusts for what we call outlier risk, and the marketplace adjusts for, it takes all the vol out at record highs like this. So it makes it really challenging, forces you to become directional, and it takes a lot of the juices out, so the two-sided trade is very tough.
I'm just looking, someone asked for a link. So I just want to send the link. Someone was asking for the minimum to open a Tastyworks account. There is no minimum.
We don't have any for Tasty Trade. We don't have any minimums. We don't have any minimums. We don't have any different levels. We democratized all of online brokerage. So we've done this twice. There's no, you can trade anything you want, any account size, any strategy you want, even in an IRA. We have no limits, no restrictions, nothing. If you have the money to do it, we facilitate opportunity. That's our job. We don't really care about anything else. I mean, whatever you want to do, as long as you have the money to do it, that's your money. You go do whatever you want. We don't care.
But you guys are, as John just said, you also have a great YouTube channel. You guys are definitely growing a lot. There were a couple of times, and I always, like you, I've learned to be brutally honest with everything.
Yeah.
It was like for the first time ever where I called in, there was like a little bit of a wait. There was never a wait for anything. And when I would get on, I'm like, what's up, guys? There's been you never have like a 2-minute hold. And they're like, there's so many people coming on. And now it's settled down. I think you must have hired more support because now it's back to like no wait. But I felt like all of a sudden there was like a flood of accounts opening on Tasty because it felt
there was a flood because there were some other firms I'm not going to mention names, but there were some other firms that got taken over by other firms and they had a lot of problems. And so, a lot of people came to Tasty because we don't have any problems. We're clean. Our software works. There's no issues, but people were having problems on other platforms. So there was like a flood of people, but it's calmed down and we've always had a great support team, but we don't, we're designed not to, we've designed the platform so that people can figure mostly everything out for themselves. You know that.
By the way, it would be pretty cool though if like there was like an hour window where if people called in to speak to the tech team, they could get you. Like it was like random, like it could be like, hey, this is Tom. How can I help you?
You can call into the show anytime. I mean, we take calls to the show sometimes and stuff like that, but that's where we're at now. Like I do a lot of live shows, that. So like the live shows are kind of my thing. And I try to see as many people, we probably try to get in front of 15,000 to 20,000 people a year in live events that we're doing. And so, I really try to be as, we just did an event in London for, almost 1,000 people. So we try to do as much as we can. It's hard. You get stretched a little thin, but I love doing, even these webinars are great just to mix it up. And, everybody that's listening now, they're either junkies or they're wannabe junkies or they're getting there, like they're just into the markets. And, you and I can talk about this stuff. We could probably go 6 hours if we had to. We could do a marathon.
I'll do it anytime you want. Honestly, we should do it during market hours because that could be a lot of fun. I think, I would. I mean, I don't even think I didn't feel like I traded today. I made 104 trades, and I was not in front of my computer all day. I love this stuff. Okay, wait. So finishing with my process as I was going through it. So if you're not getting paid to put on to sell puts, sell calls, which we said we're not. Obviously, there's still certain times where it works in different stocks, but what is the adjustment in this environment? Like summer, we know there's an election in November. Things are slow. I don't want to not trade.
No, you reduce your size a little bit. I don't think, the research is pretty clear on this. In when volatility drops down, and I saw the VIX one day today was like 8.69 or something. It was like it literally got into the one handle. I mean, I'm sorry, it got into the single digits. I think it was 8 point. When I looked at it earlier, it was like 8 point something. Here, I'll tell you right. The way this software set up, I got to look at it on this screen. But if I looked at the VIX one day, which I thought was crazy today, it's 9.51 now, but it got down to like 8.55 earlier today, so it was really low. When you're in the single digits on the one day, and you're in the 11 handle on the weeklies, or the 12 handle on the monthlies, you've got to cut your size down because you have real risk if the market decides to do something else here. You're almost think of it almost as it's a perfect world right now, and it has to stay as a perfect world for you to make money in a perfect world by selling premium. So if anything other than a perfect world happens, it's going to be challenging, and therefore you have the most outlier risk now that you'll ever have. Like markets only get to these extremes in volatility every so often. And when they get here, you have the most outlier risk of any other time. You don't have outlier risk when volatility is crazy high. You have it when it's crazy low. And I know it sounds backwards, but that's just the way the numbers work.
Two responses to that. The first is it makes sense then to be small, like you said, because then if there is an oversized move, you could quadruple up because you were really small, and then you could take advantage of the premium. That makes a lot of sense.
Yep.
But let me ask you, kind of elephant in the room question, which I'm sure some people ask you. What if it's not an outlier? What if the daily SPY expirations have just made the market too efficient? Is there that scenario or no?
No, I don't believe it.
I don't want there to be. I just worry that there is.
I don't think you can box fear. In other words, we're talking about there's a lot of things in the world that you can manage for, and you can adjust for, and you can plan for. But I think fear and unexpected, something that's unexpected is never something that you can package up and you can hedge or manage or any of that kind of stuff. I mean, when you think about all the big moves, they're not things that are predictable. Things like the pandemic, things like the first meme stock round, things that happen that are least expected. There's nothing that's predictable. You cannot basically, put a fence around volatility. I think it's absolutely impossible. So I think it's a good story right now. 0 DT options are cutting down on volatility, which would be exactly the opposite of what everybody was worried about when they first came out. But I do not think that is the case. I just think this is a typical pre-election market move. I mean, if you think about 2008, if you think about 2016, if you think about just 2020, those were all markets where we were kind of on a road to nowhere volatility wise before we just blew up. I don't think this is that much different.
Okay, that's I don't want it to be, so I'm glad to hear that. That makes me feel good.
Now, I mean, remember, you remember 2000, and 2000, 2000 was the same type of thing. I mean, we entered into 2000, volatility was like basically zero, and all of a sudden we got to March, and all hell broke loose when the market rolled over. So you just got to be careful here.
Yeah, it's fine. A couple of things. I think sometimes I'm at a disadvantage because I have seen too many markets. So I never believe the up.
I agree with you.
I wish I never saw them and I could just be bullish and blind optimist. That was when I first started trading and I thought the markets only go up, and I acted like the markets only go up, and I was fearlessly averaging down on everything. I was just great. And then I saw some really bad markets and I learned to respect the market, and I don't know, I wish I never did. And it's funny, during the interview today, they're like, you ever make any contrarian plays? And I was like, I don't like going headfirst into a train. I'd rather see it stop and start to reverse, and then I'll jump on. I go, but if you want to ask someone about contrarian plays, speak to Tom Sosnoff. He'll get onto a contrarian play anytime you want. That's what I said in the interview.
I'm the worst contrarian. I mean, I'm a convicted contrarian, and it's bad. It's not. I would rather be able to do what you do. Unfortunately, I've spent my entire career, my first half of my career as a market maker, which is essentially contrarian by nature of the business, and then the second half of my career, I've never been able to change my approach. So I'm always on the other side of every market. No matter what the market's doing, I'm on the other side. So if we're going up, I'm playing it to the downside. If we're going down, I'm playing it to the upside.
And you have that one really big day, which keeps you coming back.
Well, I need a couple more than one, but yeah.
Wait, okay. So now let's say we're putting on a spread. Most of my audience, the people that like jump on my calls and stuff, they never want to own stock. So they don't like the idea of selling
Sure.
put naked. So most of us do credit spreads.
Okay.
Now, when you're doing the credit spread, it's interesting because in this environment where premium isn't as good as you would want it to be, you want to collect as much as possible. So you'd want to go wider, but with the idea that one time you're wrong, you're going to get hit hard. You want to keep it tight. So let me give you something you don't trade. Uber. Do you trade? Are you in Uber now?
I am not. I have no Uber position.
Let's take a look at Uber. Okay.
Sure.
So Uber, and let's say we like a level in Uber. Let's say we like the 68 number in Uber because we'll work backwards like this. I think this would be a good exercise.
Well, let's do this way, because July expiration is reasonable days, 31 days, and the expected move in Uber is, let's call it $4.
Right.
So with the stock at 70 in Uber, you'd probably be looking, if you wanted to sell something, either the 65 puts or the 67.5 puts, depending on how bullish you are.
So let's say we say the 67.5 are trading for $1.30, making sure everyone can see that price.
Okay.
And we like that number. We're playing the number, and that works out well because that's the 30 delta.
Yep.
Now, is the width really just a choose your own adventure? Is it like?
Yes. Yep. It just depends on your own capital situation. So, for example, in Uber, it's a $70 stock. So you have to figure that the amount of money to trade a one lot is just going to be under 20% of the strikes price. So it'd be 14. Let's call it selling a one lot of puts would be a little less than 1,400, probably $1,200, $1,300. You can't tell in this account because this account's portfolio margin, so it's a little different. But if you, at that point, you just decide, hey, do I want to put up $1,300 to sell a one lot of puts, or do I want, minus the credit you receive, so let's say $1,200, or do I want to sell a $2.50 wide or a $5 wide and put up, a fraction of that? If you sell the $2.50 wide, you're only putting up, you're collecting 66 cents, so you're only putting up, $180. And if you go the $5 wide, you're basically putting up $400. So which is more interesting to you, $1,200, $400, or $185? It's just a function of, what you want. You're going to have the highest probability of success to sell the naked put. You are going to have the most capital efficient trade to do the put spread, and that's it.
Right. So it really is. Yeah. There's no math on.
No, there's no math. There's not one trade is not a better trade than the other. Like if you said, I'm just going to sell the naked put, and I'm going to sell the 67.5 naked put. Well, this is simple. It's a 30 delta. You have a 70% probability of profit, and that's to keep all the money. And if you wanted to, look down here, you can see pop is 72%, and the P50, which is keeping half this money, is 83%. But as soon as you spread it off by buying a different strike, these numbers are going to drop a little bit. So it goes down, from mid 70s to 69. Just makes sense. They drop a little bit. And if you wanted just to widen, if you wanted to widen the strikes out a little bit, you can see it's kind of the same. Just make a little less money, but probabilities are going to be close to the same.
I have a question about the probability. Is the probability of profit at any point in the trade or on closing?
No, on expiration.
On expiration. And the P50 is probability of having half the value at expiration?
No, any point.
That's any point. So
yes.
That's the probability of being profitable at any point.
Probability of making 50%.
At any point.
Yeah, the probability of being profitable on any trade that has a 70% probability of profit. Like let's understand what probabilities are. It's the probability of making 1 penny at expiration. That's what this 72% is. It's the probability of making 1 penny at expiration. This is the probability of making 65 cents between now and expiration, which is obviously higher. But if you want to talk about the probability of making 1 penny at any time, it's going to be close to 100%. Like it's the probability of losing and the probability of losing a penny and making a penny at any one point in time is virtually 100% on every trade.
Oh, so there's an 82% chance that you'll make 50% on your money in this trade.
Yes, exactly. That's a Monte Carlo simulation. That's just a math model.
I thought that you'll be. I didn't realize, and it makes much more. As I'm saying it out loud, it's like, of course. But for some reason in my head, it was like I guess maybe I wasn't counting that day, but I was thinking like, oh, the probability you'll be profitable at any time. But yeah, of course, it can move a penny and you'll be profitable. Yeah.
Yeah. Right.
I'm like embarrassed that I was thinking that.
But if you want a higher probability than like a naked put, you just roll it down a strike and sell those for whatever you can get from the market's a little wide tonight, on the curve, but wherever it's tomorrow, you can just move it down. You have a higher probability, whatever it is.
I have a question for you, but I want to ask the audience first because I want to ask you all. How many of you ever make trades where like the daily expirations, where you trade options that expire on a Friday, or you'll trade SPY options that expire that day? How many of you guys are currently, guys is always affectionate for men and women, are using, and when I'm looking to the right, I'm looking at the chat on the other screen. That's why I'm looking away. How many of you guys are using daily options? And oh, sorry. And as that comes in, Tom, I want to ask you, in this environment where premium is low, is it a good time to be trading those? I mean, I've heard some awesome stories. Like last week, not me, one of these guys, Christian Tharp, great trader. He bought like out of the money calls in SMCI on a Friday or Thursday, maybe one day till expiration, and the thing went up 90 points, and it was like a monster home run. Is this a good environment to be doing that because they're kind of cheap and you can represent an expensive stock for cheap? or still low probability?
I mean, I'm not trading 0 days in the SPX right now because volatility is too low for me, and I don't like the risk reward. If somebody wants to take a shot in Nvidia, or I don't think SMCI is a great shot vehicle because the markets are too wide. But if you wanted to take a shot in something that's active like AMD or Nvidia or Apple, Amazon, all the top stocks, I mean, you're right. Volatility on a relative basis right now is cheap relative. So shots are cheaper. There's no question about that. But it's still a shot, but it's priced right. But yeah, they're cheaper.
By the way, I never traded SMCI. I was just talking about an extreme move.
Yeah, no, I understand.
Where the stock costs 1,000 shares would cost $900,000, and you could buy an option for $3,000 and get the benefit of a $900,000 position.
Yeah, no, I completely understand. I don't trade SMCI either, just because I find the markets to be they're uncomfortably wide.
Yeah. And the answers, Lewis, never. Steve does. John's done it. Ihor, no, not regularly. No, not often. Didn't do too well. Yes. I like the 1DT better. Okay. So people aren't really doing it that much anyhow. So that's good there.
I did a really good piece of research this morning, actually, on Tasty. And we talked about the 0 DTs. And what we showed is that when the 1 day VIX, so the VIX 1D, when it gets to like, let's just say 15, 17, whatever it is, like double where it is now, the amount of money that you make in the 0 days is almost 5 times what you make today. So because the 1 day premium is so low. So that's why I don't like the 1 day right here. I think you're taking a lot of risk to make a little bit of money. And if vol eventually goes back higher, which it will, there's about 5 times as much money in the trade potentially for the same amount of risk.
Okay. Now I have a completely different question. I've just been meaning to ask this. At 350 every day, I know the order on closing balances come out. I believe that's the time.
340 your time, 340.
Something happens at 350 every day where all the option spreads gap out for 30 seconds.
I mean, maybe they changed it to 350. I thought it was 340. It's always been.
And I think it's that. Is that the order on close?
The order imbalances. If that's what it is, it could be. Yeah.
What time are order?
Yeah, you can check it. It used to be 340. I don't know if they changed to 350. We don't accept those order types. They're only institutional now. They're not retail.
And that doesn't. It says for the Nasdaq, it's not 355 and 4. Something happens at 350. Oh no, yeah. Market on close. There it is. All market on close orders in New York Stock Exchange are received by 3:50 p.m.
Okay, there you go. And you do understand that you can't cancel those. So if you're an institution, once you're in, you cannot cancel. So you can't spoof the market. They originally did that because back when we were floor traders, people used to put in millions and millions of shares just to give head fakes. And then, so they would put, and then they cancel all the orders. So then they changed it from 330 to 340. I didn't realize they changed to 350 because on a retail side, it doesn't apply to retail investors. It only applies to institutional investors. You cannot cancel a market on close order.
So first of all, is there any way to see that or no?
No, not retail. I mean, you'd have to have either like a Bloomberg terminal, or I'm not even sure how you can see it anymore. We don't even have access to it.
So when it's released at 350, you see the SPYs say start to run up. That means that there's real institutions that are buying the close.
No, they're not. No. All market on close orders are generally just closing. They're unwinds of an index ARB position. They're not naked orders. They're unwinding index ARB.
Huh. Because they're at 350 every day because I have a lot of options positions on.
Yeah.
My P&L goes wild for 1 minute. It's like I can't even follow what happened, and then it comes back down to normal.
Yeah, that's exactly what it is.
But there's no way to take advantage of anything there.
No, never.
Okay, just making
Because the reason your P&L goes wild and the market's widen out is because even the market making firms don't know what to do.
So if I spent 6 hours straight trying to pick out inefficiencies with the options market, you'd spend 6 hours straight refuting them, telling me there are no inefficiencies.
There are no inefficiencies. There's no inefficiencies for retail investors. I mean, occasionally you might see an order that's just weird. You know, somebody buys an offer, sells a bid, and you match up with them. But the reality is, no, you would spend the rest of your life waiting for an inefficiency.
Okay. So right now you seem to indicate you're on the contrarian side of this market. So I assume you have, and I saw on your Instagram, so it's not fair, I'm cheating, that you're bearish Nvidia, right?
I'm bearish on the NASDAQ, and Nvidia is obviously a big part of the NASDAQ. So only because I think the divergence. So I'm actually long the Russell, but that hasn't worked versus the S&Ps and the NASDAQ. But I'm really short the NASDAQ, and it has not worked.
Today it did.
Not really. I mean, the NASDAQ, was like unchanged most of the day.
Russell was up 38 cents. Yeah, you're right.
The NASDAQ has been up, I think, since the beginning of May. I want to say it's up almost 17 or 1,800 points. It hasn't had a downtick in essentially 6 or 7 weeks. It's had maybe a couple of like 0.25% to 0.5% moves to the downside, like maybe 2 or 3. But this has been one of the craziest moves I've seen in a long time. I think we're extended, but who knows? We'll see.
When I got my company back and I started doing this stuff, I decided, like, in my second act, instead of having all different services and stuff, I'm just gonna have one place where I could do whatever trade I want. I used to have like one credit spread, one diagonal, blah, blah, blah. And I was like, nah, I just do one and whatever I want, and everyone comes, and that's it. Much simpler, cleaner.
I like it.
So I've only made 4 trades. It's new. Just high probability trades. So most of them will be successful. 3 of them won. The loser is the one I'm most proud of. I started buying puts in the Qs when it was at 435.
Yeah, I understand that. I got some short. I have some long puts from there too.
But I sold premium against it, and we got out of the trade, and the loss was literally $170. And I'm like, that's my best trade. I'm like, I was as wrong as you can be, and we're out, and we didn't even lose $200. I'm like, that is a professional trade. That's the one I'm proud of. So I don't know.
Yeah, no, that's a good kick save and a beauty.
What do you think? I don't have any in my chart. Personally, I just started trading it today. I never saw this before. I know it's gone up a lot. Did you ever look at ASTS?
I have never traded it.
So it's interesting. If you take a look at it, what do you think of the IV? So
ASTS. No, I've never traded it. Did trade 16 million shares today. It's $11 stock. No, I mean, it has obviously high volatility. I don't know anything. I mean, like I said, I've never traded it. Let's take a look and see.
They do like internet and space. So they just signed contracts with Verizon and AT&T, and they announced that. So the stock went nuts.
Yeah, the stock went from $2 to $12.
Right.
Yep. I mean, if anything, I have no position there, but if anything, I would be.
I know what you'd be doing. You'd be selling calls.
I'd be selling. I probably wouldn't sell calls in here. I mean, if you asked me right now, based on today's volume, looking at how tight the markets are, I mean, there's not a lot to sell in here, but
I sold the 750 puts for $1.05.
Well, why wouldn't you cover them?
What?
Oh, in where? In July?
November 15th, 750 for $1. I figure I'm too late. I missed it. If it comes back half, I'd be happy to own a couple of thousand shares at 7, and then I could start selling calls against it.
Yeah, I probably, if I was to
hate that. You can't hate that.
I don't hate it. No, I don't hate it. I mean, I probably would be, if I had to open a trade in here tomorrow, don't love really much of anything. I'd probably sell, I was going to say I'd sell the 12.5, 17.5, but I call spread, but that's too cheap for me. $5 wide for 77 cents. I don't actually like anything in here that I could see right now. But yeah, no, I would be getting short this stock. I kind of think this is a little bit of a joke. I would hope that it would be up tomorrow. Maybe you buy the 12 and a half, 10 put spread if you can get it for $1.20. That'd be kind of my idea. But that's why we think that's why there's a market, right? We
You would
think
buy the 12 and a half puts and sell the 10 puts.
yeah, if I could get
Did you
that
do it
for
as a calendar or diagonal?
no, just a straight vertical in July. This is the kind of stock where I love to get short it. But how high did it trade up to?
It opened this morning at like 12.
Yeah.
12:45. It hit right on the open.
Yeah. I mean, I would wait for it to go back up to 12 and a half or something and then probably get short it. If I was trading it.
I'll make you a deal. I'll be out by then, so you could get short.
Okay, perfect.
Todd wants to know, did you trade the XSP? Do you trade the XSP?
XSP a little bit, but not. I trade SPX more. I have no issue with XSP. It is essentially the mini version of the SPX. It's a cash settled SPX. It has the same market makers as the SPX. I just don't like the markets in there. So, I mean, when I look at the screen, so I don't really trade it. My preference, if I'm trading an S&P 500 product, is to trade the SPX, the ES options, or the SPY. My biggest position is in the SPY, but I also like trading SPX, and I do trade ES options as well. They're all the exact same. XSP is the same thing too. All four of those products are exactly the same.
You've read Reminiscence of a Stock Operator?
Yes, I have.
More than once?
No.
I read him once.
Once was enough for me.
I love that one. He's a contrarian. So I want to ask you a question from that. And
okay,
how it applies to regular day. This is my reminiscence question. I'm curious because you were saying when you said if I had to make a trade, that's what triggered it. Let's say you have a huge bet, like some mega personality. James Cramer comes out and challenges you and says, I'm going to give you one trade. The whole world's watching. You have to be right. What would be your approach to that trade? You don't have to say the stock because it doesn't matter. What would be your approach that would trigger you to get into a trade with the highest conviction possible?
You're talking about a pure directional trade or anything?
No, I'm saying more like the conditions for making a successful trade, like the perfect.
There has to be some form of an extreme. So for me, there's only a couple of different extremes. There's a volatility extreme, which we don't have right now, and it would be an upside volatility extreme, or it can be a price extreme. I feel like a stock is either too cheap or a stock is too expensive. So the only way I would get into a situation like feeling like what you just mentioned would be an extreme price or an extreme level of volatility. That's it for me. Now, I would never feel that way about a particular stock for any kind of a macro reason.
How many times a year do you feel like you have those conditions?
Well, because I'm a stubborn old prick trader, I would say every day, but realistically, a couple times a year.
And when you do that, do you say, I know enough to just trade this like any other position size, or do you go bigger?
I am smart enough to know that I'm supposed to stay small, but I'm also still dumb enough to do stupid things. So I have a big ego, and I will do things that I know I'm not supposed to do occasionally, but it's usually at a level of frustration. So it's never the first time. So when I enter into a trade, I'm usually very disciplined. And it's only if I decide I want to add to that position and that I might lose my discipline. I don't do it often, but occasionally I lose my discipline.
All right. So let me ask you a personal question. This is for me, but I'm sure there's probably I know my audience. There's a lot of people on here who trading is not their primary profession. Of
course. I understand that.
And usually the people that are in my community are successful people. They have, they do well. They've had good careers. So nobody's like putting nobody's putting all their money into this thing.
No, you should never do that.
Did you, when I was younger and I was trading and I didn't have family, kids, or any care in the world, I felt like I had this unbelievable edge. Like I could fly free and make moves. And then as I got older and life happened and I had responsibilities and I understood the value of money and I understood myself and my emotions, I kept making the amount I trade with smaller to the level where the amount I traded with, I never wanted it to affect my mood anymore. I didn't want to have, after the market closes, me be in a bad mood because of the market. That's how I choose my buying power. That when the market's over, I'm over, and I move on to the next part of my life.
That's fair.
Are you?
No.
You feel the need to.
Yeah.
See, it's like you still fly without a net. You take risk and you are uncomfortable with that risk, and you get yourself in uncomfortable positions.
100%. Yes. I know, like, and I say that to be very honest with you and all the listeners and stuff, because it's a lot easier said than done. I understand the discipline. I get the mechanics better than anybody. I mean, I've, done this for 40 some odd years. We've written books. We've done a million hours of research and everything. I feel like I get the mechanics, but there's also a part of me that loves being a risk taker. And there's a part of me that loves, some of the things. I love all aspects of the world of finance. And I feel like, much of my successes over the years have come because I'm a pretty good assessor of risk and probabilistic outcomes. I mean, I have a lot of losing trades, like lots. And I also have a lot of, obviously good trades. And I kind of love that. I like a little bit get off on the excitement of, of taking risk. I'm not a very conservative person, and I'm not somebody it's not a money thing per se. I mean, it obviously in the end there is money involved, but I like the challenge of the markets, and I like to feel like, hey, you know what? This is good. And I also, I talk to a lot of people every day. We have, hundreds of thousands of customers, millions of viewers, that kind of thing. And I love the interactions and the challenges. And I love the fact that it's all real. Like I hate fake finance. I hate finance that's like, I hate people talking smack that don't have any skin in the game. Like when I say, like I'm short Nvidia. I'm short Nvidia, like enough to choke a horse.
Yeah.
When I say I'm short the Nasdaq, like I put my money where my mouth is. It's not like oh, I'm long one put or short a call spread. Like it's a few, it's enough that'll make most people sick.
Yeah.
But it's part of who I am, and I've always been like that for a long time, and it's just kind of what I am, who I am, and I like it. I don't want to change. I'm at a point in my life where I don't want to change.
So you still fly Top Gun. You haven't lost your edge.
I don't know. I feel like I'm not as good a trader as I once was, but I think just because we go through cycles, and I get hot for a while and I get cold, but I'm always trading. I'm like you. I make about 100 trades a day, and I've been doing that for my whole life.
I mean, there was a point where I traded where, like, I used to teach people, day traders, rows of traders, how to trade, and people would be sitting left, right, behind me, and they'd try to do what I was doing. They'd try to mimic the exact same positions I was in, and at a certain point, they would all bail. They couldn't stomach it, and then it would turn, and I'd be the rock star, and I lost that edge a long time ago. I used to be able to do that nobody else could do, and I miss it, and I just always feel like but like for my community, for what I do with people, Now they can follow along. Nobody's going to drop off. It's very conservative. I changed.
Yeah,
my
no.
approach.
I listen. I'm all about trade small, trade often.
Yeah.
I love that approach, and I for the most part do that. And I try not to. I don't ever. On Tasty. We don't ever talk about winners at all. We'll talk about losers. We have a rule: you can't talk about winners, only losers. Because I can't stand people that talk about winning trades. And so I mean, but I try to make it so that it's as real as possible. Like, I don't want to make it seem like any of this is easy, but I also don't want to make it seem like it's impossible. It's got to be fair, and it is efficient. It is fair, and I think that that's a really important takeaway. Learning how to make lots of decisions. I was doing this interview earlier today with somebody. We were talking about entrepreneurship and business and all this stuff, and he asked me, like, what is the most important thing that you've learned, running different companies and building stuff? We've built 2 publicly traded companies. And my response is that whenever you meet really successful people, the common denominator is always speed of decision making. It's always speed of decision making. There's nothing else to it. Life is about how fast can you make decisions with some kind of probabilistic accuracy. And I feel like that's what trading has given me, is a quick decision making mind. That's it.
Positive drift is what you call it, right?
I do call it positive drift. Yes.
Yeah. I still remember when the first time I negotiated with you, it was like 6 years ago, and it started and was over so fast. I was like, shoot, what just happened? I didn't even think about, like, I couldn't believe the speed, but I loved it. And I tried.
Did I just make a bad trade because they said yes, like without negotiation? Sure.
And then I realized over time I didn't. I remember it was just a good instinct, and some of my best decisions have been with that positive drift, quick. This makes sense, it's huge. It's great advice that people can take from this for sure. And it's good to be in those situations. Real quick, Nick, if people want to watch the shows and stuff, I know we gave out the link. If anyone wants to open an account, they put the link in a bunch of times, which is great. Obviously, I swear by Tasty. If you want to watch the shows, on the Tasty Trade platform, there's an activity tab and a history tab where you can sort. No, oh, sorry, he's answering someone else. Nick, if you can, just put out there for everyone where they could go watch the shows, because I want people to get educated and see what's going on every day. And those are great shows, and it's a great way to learn. And when people ask me, because I don't deal with like beginners, like I'm not explaining the basics like that anymore. And so I tell people, go watch Tasty Trade. Learn, watch their videos, which is great. Real quick, because I know we're almost. Jason, what is one of those 100 of those 100 trades? How many of those are day trades? Yeah, that was the question. That just popped on the screen. That was cool. How did I do that?
That's an interesting question. For me, day trades, never more than, I would say, never more than 10 to 20%. So I'm not really that much of a, half my career I spent as a scalper, but that's a different world for me now. So I don't know, maybe out of 100 trades, max about 20. I don't really day trade that much or intraday. Like if I am, it's mostly future scalping and maybe some, I don't really scalp options, but I scalp futures and possibly some stock.
Okay, that was good. I thoroughly enjoyed this conversation.
That was great.
Very honest. I think the emotional aspects of trading and why we trade, and understanding yourself, and I think even though you said, the risk gates are off, you're flying without a net.
Yeah. You
still seem like, I can't imagine like you being in Croatia and it ruining your day. Like if you had a bad.
Oh, no.
Right?
It won't. I'm good at, I'm good at, being able to not let it ruin my day or make me crazy either way. If it was a good day or bad. No, I don't let that happen.
So I think at the end of the day, we got to the same place. For you, it just might be no risk. Like you're never going to be uncomfortable. So you could trade at that level. For me, I was the guy that used to like literally. I had like in my prime, I would break computers. I would have people on keyboard standby. Like I'd stand up, I'd crack the keyboard, they'd hand me a new one, and I'd go back to trading. And I was like, I hated being that person. I didn't want to be that. I wanted like you. I want to be like you. For me to be like you, I have to trade a lot smaller. I can't stomach what you do. I wouldn't even
I've never broke a screen or a computer ever, but I have had partners that have.
And that's why you're so successful, because you can control your emotions, which is essentially trading. Monica said good stuff. John said this is my third one with the both of you. Love it. Learn something new every time. Thanks, guys.
Awesome.
Great audience. Tom, I really love it. I mean, maybe one day we got to do a live session where we could talk about the market. But, I love these calls. I value them so much. And those 6 years ago, by the way, for speed negotiating, the best thing I threw in was I was like, hey, as part of this, I want to be able to interview you once a month. And you're like, done. And that for me has been the best part of everything. So thank you. I really appreciate it. Welcome back from your trip. And where can they see you live next? Where are you speaking live next?
Next live show is actually in Chicago on July 13th. We're in Chicago on July 13th, and I think we're in Toronto on July 27th.
You're going to go to Canada?
Well, we're about to launch in Canada, so yes.
Oh, there we go.
We'll be in Toronto on July 27th, and we'll be in Chicago at Park West Theater on July 13th. And then after that, I think we're in Atlanta. I don't know the date, but we're in Atlanta in August. We have like 10 shows left this year, so they're all tastylive.com/events. You can find them all.
By the way, I'd be nervous for you in Canada. Like the number one request I get is for you guys to open in Canada.
I know, but we have all the approval. We have one single little crappy approval left, and it's an automatic. We're just waiting for the meeting.
Lewis said, great session. Jeff said, thanks for sharing your ideas. More comments coming in. We appreciate it. Tom, awesome. I'll see you soon. And really, you're the best. Thank you so much.
Thanks, everybody. Thank you. Thanks, Adam.
Bye, guys.
Ciao, guys.